right, good evening everybody and welcome back to Walks on Wall Street. Today is Saturday, October 14th, 2023. It is about 9:12 p.m. and we are reporting live from South Beach. Now this is going to be a shorter stream than normal, probably about 30 minutes, maybe an hour. But we haven't done a stream from South Beach in a long time, and before I have to go back to New York, which is tomorrow, I thought it'd be appropriate just to quickly explore the South Beach neighborhood of Miami. Now, we covered a lot last week. Obviously, last week was a big week on Wall Street as it relates to inflation. We got the PPI numbers out, and we also got the CPI numbers out, which came in hotter than expected, leading us to believe that we're going to have tighter monetary policy for longer, and that's probably not only going to last in the United States, but globally as well. Additionally, oil prices have gone up, particularly crude oil, off the back of Saudi Arabia, alluding to the fact that they may cut oil production. If we take a quick look at crude oil futures, they closed the week at $87.69. Now, for some further context here, I think it's appropriate to point out that in March of 2022, particularly March 7th, 2022, we hit a high in crude oil right around $130 a barrel. The question is, have we emerged from this year-long bear market in crude, and is the war in the Middle East between Israel and Hamas going to be the catalyst that ignites a new bull market in crude? We'll talk about that a little bit, not tonight, since today is Saturday. We usually don't talk about financial topics, but I want to sort of leave everybody off with this. Sort of mull over it over the weekend, maybe do a little bit of your own research. Regardless of what you hear, right? And I never like to get political on the stream, but there's a lot of talking points on both sides of the aisle. You know, how the United States isn't energy independent anymore, this and that. But here's the facts. U.S. oil production hits an all-time record high. So we've actually never been producing more oil here in the United States. So we'll go into a major deep dive into that. We'll go into the nitty-gritty in terms of the data. I have a couple reports from the U.S. Department of Energy's Information Administration I want to go over. Maybe we'll include that in next week's newsletter. But I think this is important as we think about the future of energy production in the U.S., particularly as it relates to oil. Okay? So just keep that in mind as we move through the weekend. Lastly, there will be no live stream tomorrow. I am going to be flying from Miami to New York City, so there will be no stream. So unfortunately, we do not have time to do the markets a look ahead live stream. However, I will say this. We are now officially in the thick of earnings season. Okay, this is Q4 going into the end of the year. We only have, 2.5 months left of the year, which is wild. I really can't even believe that, but as we've talked about yesterday, earnings season kicks off with the Wall Street megabanks. We heard from Jamie Dimon, JPMorgan Chase, we heard from Citi. This is going to continue going into next week. It's going to be busy. So when we get back to New York, it's going to be almost relentless, back-to-back live streams covering all of these stocks, doing in-depth analysis on their corporate earnings. Did they beat analysts' expectations? Are they raising forward guidance? Are margins compressing? Or are margins getting a little bit better? And what is the overall outlook and the verbiage, and I would say temperament, of corporate America CEOs in relation to their viewpoint of the U.S. economy looking out into 2024? So be ready for that. Okay, be ready for that. Lastly, and this is the last announcement, I know I've said it a couple times, we do have a lot of new people here. Thursdays, okay, every other Thursday from here on out, a little bit of announcement, every other Thursday after the market closes. So once the closing bell rings, every other Thursday you will be getting an email in your email box of my bi-weekly equity research piece. Okay, it's called the Behind the Street newsletter. If you want to sign up for that for free, you can go ahead. It is our personal Substack for everybody who is a part of Walks on Wall Street. I think this is going to be a good way for us to share ideas, get feedback, and then we could talk about it on the stream. So if you want to sign up for that, I dropped the link in the description. On Thursday, we sent that out around 7 o'clock. We did an in-depth review and a deep dive on inflation, the specific categories of inflation, shelter costs, food at home, used vehicles, what this means for monetary policy in the future, and what this means for the real estate market, more specifically as it relates to commercial real estate. And that's all I got. All right, so I'll go ahead and close up the laptop here, everybody, and we will take a little bit of a walk around South Beach. So give me one moment. All right, let's see. Turn my Wi-Fi off. It's a beautiful night in Miami. You can see all these wonderful palm trees. This is actually the beach. So we are standing literally right outside, right across the street from the ocean here. This is sort of the main drag of South Beach. I believe this is 26th Street. So 17th Street is sort of where the convention center is, the Miami Beach Convention Center. That's where they had that Bitcoin conference a few years back. This is also where they have a lot of the art. I believe Art Basel is here as well. You have these beautiful condominiums overlooking the water, which is quite stunning. But let's say hello to everybody in the chat. I see Omar MD says hello, Tom, and good night. What's up, Omar? Jamie Massetti is here. Brian Forrest, Gary Carpenter, Terry says looking forward to it. Good to see you, Terry. Thanks for joining us. Austin City Limits is here. Welcome. Juan Fernandez. Lila says hey, Tom, and all. Juan says watching the UM game right now. Hope is all is well with you guys. Oh yeah, it's football season, right? Yeah, there's a lot of University of Miami fans, quite obviously, down here. 5 big colorful rocks stacked on top of one another, right in Collins Park. I think there's also an art museum down here. Right here is the Eden Fine Art Gallery. We always pass the Eden Fine Art Gallery in Soho. Hey, JC is here. What's up, JC? Good to see you. I have an interesting piece coming out about Bitcoin a little bit later. So I can't say too much about that. Hey, DM, what's up? Says hello, Tom, and everybody. I want to welcome you all to South Beach. Hey, Tariq Khan says, let's get it, Tom. Selling 300 to 500% stocks held since May 2020. Hold on, let me turn on Do Not Disturb. Interesting, Tariq. It's good to see you. So, Tariq, what is your expectations for earnings season? You know, we heard from some of the Wall Street mega banks. We'll keep it kind of light on the financial talk tonight, but I think the encouraging thing for the vast majority of the country is bank earnings so far have come in okay, right? The health of the financial system seems to be intact, instilling a lot of, I should say, confidence from the Silicon Valley bank collapse, which spooked a lot of people, sparked bank runs across the country. This is the Eden Gallery. It seems like they have slightly different pieces than what they have in Soho. Hey, Juan Fernandez says they need regional banks to hit good. Well, the problem that I see there with a lot of the regional banks, I think you're going to have a lot of consolidation. And here's why. Oh, look at this. I like these pieces by Alec Monopoly. He's a really good artist. I'm not sure if he's native to Miami, but he has some really, really unique and cool pieces here. I like the one with the Donald Duck with the money bag. Ooh, look at that one. That one says Dow Jones Industrial. Hold on, let me zoom in on that. That's so cool. I wonder how much those pieces go for. You know, I only have 2 real pieces of art. I'm not a big art guy, but I actually have 2, I should say, real pieces of art from notable artists, and they're still in storage. I haven't put them up at my house in Miami ever since I moved out of my place in New York. I gotta see if I don't even know where they are, actually. I gotta figure that out. But I'll try to show you guys some photos of the 2 pieces I have. It's an exact piece outside of Federal Hall. So Federal Hall, obviously everybody knows that's where George Washington was inaugurated. So the first presidential inauguration in the United States happened right outside the New York Stock Exchange on the steps of Federal Hall. And I have an amazing painting. I think it's like one of 18 that I got in New York. But yeah, I was meaning to hang it up at my place here in Miami, but time definitely just got away from me. So we are on the corner of Collins Avenue and 20th Street. We are going to be headed downtown. Maybe we'll make a right on Lincoln Road. Hey, Action Kid, what's up? Says that's so cool, and now Federal Hall is being renovated, so you can't even see the steps anymore. I know. So, Action Kids, you know exactly how long that renovation is going to be going on. When they first put it up, I think this was like about a year ago now, there was a report in the Wall Street Journal. There was an article that came out that said the scaffolding is going to be up for 10 years. Now that seems a little egregious, does it not? 10 years? That's a little crazy, but look, I get it. The building is over 100 years old. I believe the buildings department in New York City closed it down because it was such a liability. For anybody who's not familiar with Federal Hall in Lower Manhattan, everybody, you know, who, if you worked on the physical street of Wall Street or around Liberty Street and the like, chances are you probably used to take your lunch breaks and sit on the steps of Federal Hall. And apparently it wasn't safe. Like it was almost in jeopardy of full collapse. So they have special restoration company doing a major restoration on the building. Wow, Action Kids is I'm reading until 2030. So yeah, I guess it's about right. A little less than 10 years. Crazy. I love all the Art Deco style buildings down here in South Beach. Everything's very clean, beautiful down here. Hey, Will, what's up? Tariq Khan says, Tom, Alec Monopoly goes between $20,000 and $50,000. Wow. I think one day, whenever I have that kind of money, I want a custom piece by him. Maybe of like a Bloomberg terminal or somebody sitting in a window, right, overlooking Park Avenue, looking at a Bloomberg terminal or something. Or like old classic newspapers, like old print newspapers, something like that. Something of that nature. Vivian Francesca says Alec Monopoly art pieces range from $20,000 to $50,000 bucks. That's a lot. You know, if you go to my channel page, if you click on the community page and you scroll all the way to the bottom, I think about 2 years ago now, I took some photos of those 2 art pieces. I gotta find them. I gotta find what I did with them. Anyway. Somebody's talking about Atlassian's acquisition. Yeah, that's right. Michael Cannon-Brooks's company, Atlassian, that trades under the ticker symbol TEAM, they acquired Loom. So congratulations to them. It's a big acquisition. Hey, Arctic Paratroopers here. This is Good Evening Tom. What is going on? Western Mass Dave. This is Hello Tom and Gang. South Beach, all that beautiful Art Deco. Yeah, and it seems a bit quiet tonight too, which is nice. I was sort of reluctant to kind of come down here because I kind of wanted to have a more, let's just say, relaxing night, but it seems like it's actually pretty quiet here. And for a Saturday night, that's kind of out of character for South Beach. Hey, Will, what's up? Says, hey, Tom, I've ever heard of the stock ticker symbol HE, Hawaiian Electric. Interesting company. With all the wildfires, they are being sued. It's trading below book value, most likely a value trap. Yeah, I've never heard of it. Never heard of it. Now, the way I think of companies so think about it like this: Hawaiian Electric. First of all, I've never heard of it. But the reason why you want to buy a stock, or the reason why you want to buy a company, is for the future earnings potential and the future cash flow generative potential. And the way I think about it is, is Hawaiian Electric, a big innovative company where they're going to have a new product line out or a new product set out, where they're going to double, triple, if not quadruple their revenue over the course of the next, 5 to 10 years. Are their earnings going to be able to compound out, 25% per annum? Probably not. So I tend to stay away from those things. I want to look for a company who has a fantastic product, right, with an amazing moat around it that has a high likelihood or a high probability to compound out its earnings 25% plus over the next 5 to 10 years realistically. And that's why I kind of stay away from all the penny stock nonsense, right? A lot of times you'll have people, giving you stock tips of saying, oh, this particular penny stock, it's going through a short squeeze and it's going to go up and it's coiling and all this, technical analysis stuff. But that's not what makes stock prices appreciate. What makes a stock price appreciate is its earnings power, right? If you have company XYZ is set to earn, $2 a share in 2023, and it's projected to earn $10 a share in 2024, well, the stock's going to go up, generally speaking, right? I mean, look at all of America's best companies since inception, right? Look at the earnings power of Google in its early days, and look what it's generating now. You want to own businesses that are churning out significant amounts of free cash and have massive, massive earnings power. So, these little, in my view, whenever you see these things like, oh, this catalyst, this wildfire here, and the company's trading below this and that, yeah, maybe, I guess, there could be a little bit of, mispricing in the marketplace. But what is your risk-adjusted return on that? I would much rather buy and size into a position or a company that has a clear vision for the future of new products and services, high earnings power. But, if you can do it and you can make some money off of it, then, more power to you, for sure. Hey, Ahmed is here. What's up? Ben, Wendy, England. Good to see everybody. Thanks for joining us. D is here. What's up, D? Mariana, Texas says, when did you arrive to Miami? Any special reason? I live here. I own a house here. And I got here 2 weeks ago. Terry Wells says, are the markets watching what's happening in Middle East? Yeah, I would assume everybody's definitely watching what's going on in the Middle East. The horrible, horrible atrocities that are going on over there. Your second question is, can the U.S. afford to fund 2 wars? I don't think so. Think about our national debt here, and I don't want to get political, but I'll talk about it from a financial perspective. we are running such deficits in this country. We cannot afford to sort of, fund two proxy wars at this moment. Now, do I agree that we should, ensure Israel has everything that they have to protect themselves? Absolutely, 100%. But I think our leaders need to be a little bit more strategic about how we go about this. Do a post-analysis of our mistakes in the war in Iraq, right? Those were massive mistakes that not only cost us trillions of dollars. Oh, look at this. This is a new sign. I like that, like a waterfall. Not only did the war in Iraq cost us trillions and trillions and trillions of dollars, more importantly, it cost us the most valuable thing on earth, American lives and civilian lives too. So, there's a cost to everything. And, I think, maybe that's why some of these terrorists are launching these horrible, heinous attacks, is because they know we're in a vulnerable position, right? They know that, look, we could talk about that for an hour, 2 hours, all the different speculations, but, it's good for the war machine, it's good for the military-industrial complex, it's good for Raytheon. So, yeah, Will says trillions in interest as well. That's true. War's hell. War's horrible. Terry Wells says, will oil explode? Well, we were talking about crude oil earlier in the live stream. This is Lincoln Road, by the way, or Lincoln Avenue, apologize. No, Lincoln Road, yeah. We'll just check out light crude oil futures now. I think we closed the week at what, $89 a barrel? $87 a barrel, excuse me. That's a 6% move in a day. Now, I think much of that move was attributed to, I believe it was Saudi Arabia, threatening that they're going to cut oil production if the military strikes continue to persist on Gaza. At least I believe it was Saudi Arabia. You had a massive move. You had like a 6% move in crude there. But what I really want to talk about next week, we're going to do like a huge deep dive about domestic oil production. Because what a lot of people don't realize right now, is that the United States is drilling more oil. The oil production in the United States is at all-time record highs, right? So, again, it's Saturday. I'll save that topic for Monday. But this is the Ritz-Carlton here at South Beach. Beautiful, all up and down here. Love the palm trees. Now, I'm excited for the holidays down here in Miami because they usually decorate all the palm trees like this. Hey, walks is the light letters. Horrible. All right, let's cross here. We'll make a right. We'll see how packed Lincoln Road is tonight. As we continue to walk down, there's a lot of restaurants, bars, and things like that. But a lot of people have been saying, America's in a very vulnerable position, which I do agree. However, this is the way I think about it. It is true that the U.S. is in a vulnerable position, but the rest of the world is in a 10x worse off position, particularly China. And the narrative, it's funny, the narrative is that, you know, China is going to overtake the US to be the world's superpower. China has its own massive, major systemic problems. They're going through probably one of the worst housing collapses in human history right before our eyes. It's just very underreported. Check out the Chinese commercial paper market. So the old saying, and I'm not sure who quoted this or who coined this particular term, but it's when the United States sneezes, the rest of the world catches a cold. And I couldn't agree more with that, because the global economy is so massive and so big now that almost every other country is interdependent on each other for success. So if the United States falls into a deep recession, that's not going to benefit China at all. If anything, that's going to hurt China. We are the largest consumer of Chinese goods. So it's in nobody's interest to really have the other party in a bad spot. At least that's how I kind of view things. Beautification says, Tom, where should we put our money for the next 12 months because of this war? Thanks. I can't advise on that. I'm not licensed to advise what you should do with your money, fortunately. JC says, what about BRICS? I think that's all total nonsense, and it's not going to take off at all. There was actually new reports out, and I put the article on my Twitter page. If you want to check it out, you can follow @WalksWallStreet. But the volume of US dollar transactions in the United States, or excuse me, in the global economy reached an all-time record high. So across the world, the US dollar has never been used more than it is today. So you have all of these narratives, you have all of these people, you know, sort of saying the world is going through a de-dollarization, everybody's getting off the US dollar. That's just like fear porn nonsense. Like those people actually have no idea what they're talking about. Like just look at, I mean, it's good for clickbait and to get people riled up, but if you actually look at the data, the US dollar has never been used more throughout history than it is used right now today. And I mean, just ask yourself this, right? If you're a viewer, right, you're a participant in the economy. If your boss came to you tomorrow and said, hey, you know what? We're not going to pay you in US dollars anymore. You know, we're actually going to start to pay in Russian ruble. Would you say, yeah, sure, I'd love to be paid in some Russian ruble? No, of course not. You know, what if they said, hey, you know, we want to pay you in some Thai baht or pesos? You'd probably be like, no thanks, right? So the dollar is, in my view, right, and I could be wrong, just because I say something doesn't mean I'm going to be right. But I think you're going to see more adoption of the use of dollars, not less. So here we are at Lincoln Road. It's a beautiful night out. Hey, John Abraham, what's up? Will says, Tom, what do you think about money market funds versus CDs versus shorter maturity treasuries? Yeah, so I think it's a good question. And fixed income, and I wrote about this in the newsletter. The newsletter is called Inflation is Ugly, but what's the good news? And the good news is that savers are being rewarded again. So if you want to read that article, if you type !news, NEWS in the chat, the Nightbot will drop the link to the article I wrote. You could sign up for free and you could read it for free. But what you said, Will, is exactly correct. If you look at yields across the board, so if you look at the US yield curve if you look at treasuries, they're finally yielding a real rate of return. Now, if you look at the longer end of the curve, right, just speculate here for a moment buying the 30-year treasury. The way bonds work is as prices of bonds go down, yields blow off and they go up. So bond prices have been in a bear market, one of the most brutal bear markets ever. And you have bond yields going up. So let's say if you were a money manager, right? And you could park your money in 30-year treasuries. The prices are rock bottom, but you're actually going to now get a real rate of return on your money. If you have 10 million bucks and you put it in 30-year treasuries, well, guess what? If you have a view that in the next 5 years, right? Let's say if your exit strategy to sell those bonds are going to be 5 years from now. Well, in 5 years from now, 5 to 10 years from now, I think yields will probably go down. They're not going to go down next year or the year after. That's what I'm speculating. But I think you're going to have yields probably come back down within the next 5 to 10 years. So if that's the case, over that duration, you're going to be gaining interest, right? That's beating inflation, and when you turn around and go to sell those bonds, you're probably going to get a double or a triple because yields have come down. So if you look at some of these fixed income products or bond funds like TLT, if you have like a 10, 20 year time horizon, or maybe a little less than 20 years, let's say 10 to 15 years, I think there's significant alpha to potentially be generated there. Now, nobody can appropriately speculate interest rates, especially not me, okay? But, looking at something from a risk-reward perspective, if you're a person who is underexposed to bonds or who doesn't have really any exposure to bonds at all, think about the prospect of purchasing bonds, getting a real rate of return on your money, beating inflation, right? Inflation in the United States, CPI just came in last week. It's 3.7%, I believe. And then you have that upside on the bond price appreciation, assuming rates come down in 5 to 6 years, right? Probably not going to come down next year, probably not going to come down the year after that, but, in 5, 10 years, assume, who knows? It's a good question. I don't know, what do you guys think? What is your perspective? There's the old saying on Wall Street that if you can predict where yields are going to go, you'll be a billionaire. And I'm not a billionaire. I cannot predict where yields are going to go. I'm just speculating like anybody else. I love these palm trees here. It's so gorgeous. Willis says, but in the short term, TLT could be very risky with the higher for longer Fed. Yeah, exactly. So what I said was, if you have an exit strategy of say 5 to 10 years, right? It's highly likely that yields will come down in 5 to 10 years. Next year, it's unlikely yields are going to come down. In 2 years, probably unlikely yields are going to come down, or aren't going to come down, right? Because inflation is still entrenched. I'm betting on higher for longer, but again, you have the ability now to get interest that's going to beat inflation. You haven't had that in a decade in the United States. But it's an interesting conversation to have for sure. I wonder what restaurant this is. It looks very popular. I know, JC's CPI basket of goods is a joke. It really is. Will says, just buy bonds, keep it simple, and hold to maturity. Well, that's actually what got a lot of banks in trouble. So if we remember back to the Silicon Valley Bank collapse, the main reason why Silicon Valley Bank was in such a massive crisis is really not because they did anything super risky. It's because they did something that was super, super conservative. Now, yes, it's true that they didn't hedge any duration risk at all. Essentially what happened, right, and this goes back to Will's point of holding to maturity, right? So Silicon Valley Bank mainly banks venture capitalists, private equity, and the like. And what happened in 2021? Well, you had massive, massive amounts of monetary and fiscal stimulus being pumped into the market because of the Big C. And since money was so cheap, a lot of that money went into venture capital and private equity. Well, what is the main bank that banks all of those institutions? Well, it's Silicon Valley Bank. So you had massive amounts of deposits going into Silicon Valley Bank all at once. Now, I want you to think back to your Finance 101 class in college. The professor's at the front of the room and he says, all right, everybody, open your textbooks. We're gonna talk about banking in the United States for a moment. One of the first things that'll come out of the professor's mouth is that bank deposits are liabilities to the bank. They are not assets, which is kind of weird to think about, right? But it's true. You would think, let's say if I'm a bank and you give me $100,000, you would think that would be an asset to me. It's not, it's actually a liability. All bank deposits are liabilities, hence why they lend out money, right? That's the way banks work. They take money in, they lend it out, and they try to make a yield or a return on the money. The problem with Silicon Valley Bank is they took in so much money so fast that they didn't know what to do with it. They couldn't lend it out fast enough, so what did they do? They dumped it all, about $80 billion worth, into long duration, very, very safe bonds. Now, it wouldn't be a problem, right, if they could hold those bonds to maturity. But what happened? There was a lot of smart investors that held their money at the bank, and they said, oh my God, interest rates have moved up so much to the tune of 500 basis points. So in the mark-to-market accounting calculations, well, guess what? The bonds that Silicon Valley Bank bought, $80 billion worth, they were worth almost nothing, right? 30 cents on the dollar. Now, it wouldn't be an issue if they were able to hold those bonds to maturity. But the problem is people started to demand their money back. And when people started to demand their money back, they don't have any money, right? And so the way that Silicon Valley Bank tried to return money to their customers is by selling their assets on the books, right? Selling those bonds. But what did we just cover? Well, those bonds are now worth about 30 cents to what they paid. So this is why it's important, right? So it's not like the financial crisis where they were speculating on toxic derivative assets. They were buying very, very safe treasuries and mortgage-backed security products. But as interest rates went up, the valuation of those bonds on the books went down. So, and it was yielding like 2%, less than 2%, like 1.9%. So as everybody's like, oh my gosh, this is gonna be a big issue, let me get my money out of there, they had to start force selling their assets that are now worth nothing, and then you have a run on the bank, then you have a full collapse. So it's important, right, to have a risk manager at the bank do some duration risk hedging. And to Will's point, there was really none of that going on, unfortunately. Look at this. Hey, Sabrina Fair, what's up? Good to see you. Thanks for joining us. Let's turn around and go back to Collins. We'll walk the other side. Just because I don't want to go too far down. Now, I think when I land in New York, I think it's only going to be like 60 degrees, which is going to feel really, really, really freezing. It's going to be like a cold shock, and I don't have a jacket, so I'm thinking about what I have to do. Today was 88 degrees in Miami. But if you guys are enjoying the live stream so far tonight, you can feel free to leave a like on the video and click the subscribe button if you're new. I think this is a Lucid Motors across the street. I know, Maurice's Uber to the apartment. I don't know, it's just Ubers are so expensive from JFK now. It's not uncommon that the Uber from the city to JFK or LaGuardia could actually be more money than the flight ticket, which is wild to think about, but it's true. It kind of sucks. And also, Uber prices are going to go up even more now because of the congestion pricing in New York City. So for those of you who don't know, I'm sure everybody knows by now, if you want to drive south of 60th Street, so think about Broadway coming down to Columbus Circle. You'll see what I'm talking about tomorrow as we do our live stream in the city. But you now have to pay an additional toll just to drive to Midtown Manhattan. So in addition to everything, you know, coming into the city from New Jersey, coming into the city from Long Island, paying the tolls there, now you have to pay just to drive in Midtown Manhattan. So more tolls, more fees, more craziness. And also the subway went up, I believe. I think there was like a 10% bump in the fare, which probably means the Long Island Railroad is going to go up too. That restaurant looked really good. Hey, Jade 12 or 1112, what's up? Good to see you. Tariq Khan just take the helicopter from JFK. That's called Blade, right? And I think Blade is owned by Uber. I think they merged or something like that. Hey, Lupe, what's up? Good to see you.
To be in like a place
Lupe's use your good old skateboard. It's like a suicide mission now. It's trying to skateboard in the city. Not necessarily between the cars. There's just so many electric bikes and so many mopeds now. And the people who are on the mopeds using them, they're like putting them in the bike lane and going the wrong way. So it's like Mad Max. So dangerous. So unfortunately, I don't really ever use the skateboard anymore in the street. I just don't think it's worth it. It's so dangerous. I wonder what the exact name of these palm trees are called. I think these are my favorite ones. I believe this type of palm is native to Africa, I think. But these are my favorite by far. I'm not sure exactly what the Austin City Limits says things changed drastically in 4 years. I know. I mean, the city, we were skateboarding in the middle of the street. There was literally nobody in the city, literally no one. And now things are even more packed than they were before the pandemic. Mr. Fine Arts is Royal Palm. I don't think they're I think the Royal Palms are the smooth. They have the smooth trunks. These have sort of these rigid edges. I think this gelato place is also in New York. Hey, John says, if you live in Miami, where do you stay? In New York? Own anything? I rent. I rent in New York. Hopefully over the next 2 years. I wonder what these things are. They almost look like a jelly type substance, they look like. Hey, Braveheart, what's up? This place looks good. I actually may try this. It smells good and I've never even seen it before, so I may try that before I go home tonight. Oh, it looks like Turkish sweets. I'm gonna ask and I'll report back to you guys when I'm back in New York. This is the Cheesecake Factory. Supposedly it's not new, but it looks new. Love these Art Deco style buildings. Hey, the 79FH, what's up? Good to see you, Frank. Eric says, what street is this? This is Lincoln Road Mall. Sort of like an outdoor mall where they have restaurants, outdoor dining, all types of shops, coffee shops. It's a nice place to come, particularly on the weekend here in South Beach. Another good place to come if you're visiting South Florida, particularly South Beach, I would visit Espanola Way, which is really nice. There's a lot of restaurants there. I don't think we're gonna have enough time to go there this trip to Miami, but next time I'm back in Miami, I'll take you there for sure. That's a really fun place. Lots of good food. Oh, Braveheart, yeah, you're right. It was the Vava 2. That is a crazy super yacht. You are 100% correct. That's what it was called. I believe he's an Italian-Swiss billionaire that sold his pharmaceutical company to Merck. I think he's worth like $11 billion, and he parks his yacht here in Miami sometimes. You're right. You're absolutely right. All right, everybody. You know, we do have to call it a night, though, unfortunately. We are up against the hour mark and have to be up early to catch my flight. If you enjoyed the stream tonight, feel free to leave a like on the video. Click the subscribe button if you're new. And now every other Thursday after the market closes, I will be sending out my free research piece to everybody for free. So if you want to sign up for that, just click !news, N-E-W-S in the chat, And again, every other Thursday after the market closes, you will get a free research piece written by myself covering equities, fixed income, global markets, as well as the localized real estate market in New York City and Miami. So I want to wish everybody a safe rest of the weekend. Take some time to rest, take some time to recharge, and we will see all of you back in New York City tomorrow night. So Michelle Henry, thank you so much. Joe Abdullah Mohammed Delaware Gold, thank you so much. Joseph Hardaway, Dusty Cole, DM NAV047, Maurice, everybody take care. Sharon, good to see you. Tatted Tara, all of our friends, be safe and have a fantastic weekend.